Hey there, Matt Terrio here from Epic Real Estate. This is where we show people how to invest in real estate and help them escape the daily grind so they have the option to retire early. That's why we're all into real estate, and that's why we look for it, or we pursue it, because it really is the final frontier where the average person has a legitimate shot at creating real wealth, and that's what we're all down for. So I'm going to talk about something kind of unique today, something I haven't heard anybody mention, called FOMO investing. I mean, we've heard of the expression. I'll talk about that in just a second. But at the beginning of this month, or I guess on the last day of this month of August, I'm getting together with a group of investors, and we're going to work together for the next 3 weeks side by side to help them get a deal done. And specifically, it's a 10-day challenge to get a contract signed in 10 days or less. And I'll be working right along with you, everybody. I'll be doing the exact same things. You can look over my shoulder. You can watch. I'll be there to help you, to support you, to answer your questions, analyze your deals, just overall help you get things done. So if you'd like some more information on that, you can go to thelegendschallenge.com. You see the domain name right there. And I'd love to have you if you're up for the challenge. So we're going to work together for the first 3 weeks of September together. Hi, Gian. Everything is good. It is Sunday. We just had an amazing creative financing masterclass yesterday. And if you made it, I'm really glad that you did. And if you missed it, well, we'll probably be doing it again, I don't know, in a few months or so. So be on the lookout. All right. So what we're going to talk about today is FOMO investing. And I'm just going to shift my screen over so I got full screen. And then I'll come back. If you got questions, I can interact with it. It's difficult for me to do the screen and see the questions at the same time. Just a one-man band over here on a Sunday by myself today. The family's out doing fun things, and I'm here with you doing this fun thing. All right. So here we go. I'm just going to make sure everything's working all right. All right. I guess we're good. So FOMO investing. I'm just not hearing anything out of my monitor over here, and I'm not being a good host at the moment. So FOMO investing. Perfect. Okay, we are working. All right, let's go. FOMO investing. FOMO, acronym for the fear of missing out. And it can have a little bit of a stigma attached to it, right? If you go in and you FOMO into an investment or FOMO into an activity, it's basically because you're afraid you're going to lose and you might not have been rational and you made some emotional decisions. Sorry. And then, but right now with real estate, with the market have been so hot, is it foolish to buy real estate now? Or should you wait? Would it be smart or would it be smart to get in right now because it might not stop? So let's talk about that. Real quick, we review this every once in a while. I want to remember or remind everyone why we actually want to be involved in real estate in the first place. So I'll just go through this really quickly. So the reasons to invest in real estate. First, cash flow produces an income. Okay. Second is appreciation, right? So we know properties appreciate over time, and I'll show you a little bit about that, the history of that in a second, but you probably already know that. Then there's the tax deductions. It's one of the final frontiers for the final, what do we call it? One of the last tax hedges that we've got. Tax shelter is the word I was looking for. And then amortization. This is paying down of the debt. And if you've got an income property that you're leasing out, that's your tenant that's paying that down for you. Your tenant is actually buying the house for you. And then 5, it's real. It's a human necessity, and it'll never be worth zero. And then last thing is leverage. We're able to leverage other people's money, other people's resources inside of real estate. Really, that's not available in any other typical investment that's available to the average person. And that leverage really helps accelerate wealth. It's why it's produced more wealth than anything else. Right here from Mr. Andrew Carnegie himself. More money has been made in real estate than in all industrial investments combined. It's a huge statement, right? And this is coming from one of the richest men that has ever lived. I think he is the richest if you make the adjustment for inflation. Anyway, this is what it looks like. Appreciation over time. And so this starts back in 1985 and comes to the current. If you go all the way to the far right, that's the year starting at 2020. So let's we know it goes up, and then we know that the average homeowner is 40 times greater in wealth than the average renter. And so I don't know if we need any other reason than just that. And that's just if you got just your house. That wouldn't even count for if you bought a house and an investment property. That number goes up significantly. All right. So I've got a lot to cover. I want to go through this kind of quickly. But if you need any help, then at the end, I'll show you how to get it. Actually, you just go to the Legends Challenge. That'd probably be the best place, thelegendschallenge.com, if you need some additional help after we're here. Otherwise, take this information and go out and do with it what you see best fit. So we zoom in on that big chart that I just showed you. That was the one back here. So on the far right, I'm zooming in on that. And so this is just 2020 to 2021. And so we can see as it's risen, as it continues to go up, and it's right there in July 2020, it took a significant uptick, right? You can see the bend in the chart there. So a lot of people are thinking, I wish I would have bought house back in July, right? I wish I would have invested more, because look at what that would have done. I think this comes out to like a 24% increase in home values. But where is it going to go next? Is it going to continue on this trajectory? Is a big concern. Like, should I still go in? Is my fear of missing out? Is it a real fear? Should I be afraid? Or is it just my mind's playing tricks on me? Well, let's look, because we've got a lot of uncertainty, a lot of concerns to think about as we make this decision for ourselves. First one is political policies, right? So regardless of which side you're on, the political policies are changing pretty dramatically right now. And, even just today, what it looked like 2 weeks ago is totally different today than what it might have been just 2 weeks ago. So things are shifting. Things are really moving around. So those are things that we have to be concerned with and pay attention to. The pandemic is not over, right? By all accounts, it looks like the pandemic was really healthy and supportive of real estate, but will it continue to be? Will there be another lockdown? I mean, God, I hope not. I mean, I don't have any news on that. I'm not saying there's going to be, but you certainly hear the news talking about it. There could be, right? Number 3, foreign affairs. What a twist that has taken this week. And it has been slowly building here with our relations with China, our relations with the Middle East, our relations with Russia. Those are in the news and in the conversation much more than they've been in my recent memory. And it seems like they're things that we should be concerned about as well. And then the monetary policy. We've printed a lot of money recently in this year and last year. And really, we've been printing a lot of money all the way back since 2008. But there are bills being voted on right now and discussed and negotiated that could potentially add trillions and trillions of more money being created. And how is that going to impact us? Another thing to consider is immigration, right? And, depending on how deep you want to go into conspiracy theories or whatever, but, it's unique that we've let in over 1 million people through our southern border this year, and our northern border is closed. So I'm not sure what that actually means, but there's a lot more people coming to the United States, not just the ones that are being born here, but there's a lot of other people coming through. And I just read an article, or I didn't even read the article. I read the headline. So I don't know the whole story, but it made a lot of sense. The convergence of some of these concerns, for example, our foreign affairs and what's going on in Afghanistan. If we combine that with the issue that's going on in the southern border, what could that amount to? What kind of epic failure could that create, right? So there's a concern. Then also mortgage rates. Because when it comes specifically to housing, I think this is the only real variable, right? We've got all of these other things that could indirectly impact the market. But number 6, mortgage rates could directly impact. And so let's look at kind of what that is and where we're projecting that to be. And I covered this last week, so I'll just go through it really quickly because it's relevant to our conversation today. But this came out, this was on, where is this? I think this was on Barron's or Fortune.com. But mortgage interest rate predictions and forecasts. Mortgage rates likely to rise from current levels by the end of 2021, right? So they're likely to rise. But let's look at what each person that came up with this assessment, what they had to say. So this is Len Kiefer, Deputy Chief Economist with Freddie Mac. He says, our forecast is that rates will be relatively flat next year. So he doesn't really think it's going to have much movement. Greg McBride, Chief Financial Analyst for Bankrate. He's saying next year is likely to see a fair amount of volatility, and we'll see a lot of the record low rates that we've seen this year. So I think it's going to go up and down, and we might see some more record lows. And then Danielle Hale, Chief Economist at Realtor.com, she says making any kind of prediction for next year is difficult, but our expectation is that mortgage rates start the year roughly in line with where they are now, and they stay fairly low, right around 3% for the first half of the year. And then Logan Motashami, housing data analyst at Housing Wire, believes that we're going to see the average mortgage interest rate inch up in 2021. And then Lawrence Yun, chief economist with the National Association of Realtors, says he thinks rates will be similar or modestly higher, maybe 3%. So mortgage rates will continue to be historically favorable. So everyone, by all accounts, it looks like the mortgage rates going forward might inch up a little bit, but we might see some new lows. But no one is saying like they're going to boom. No one's saying that they're going to skyrocket or significantly change. So if you're in the market for buying real estate, then that would be good news. So what do we do with our money then? With all of this uncertainty in the market, what do we want to do? Do we go out and bury it in the backyard? Do we go buy gold? Do we consider buying bullets? Or do we want to look at income producing assets that appreciate? And I think those types of assets are the best things that we could be looking at. And when you can attach that to an actual human need, even better. So what I mean by a human need, I'm talking about food, I'm talking about water, I'm talking about oxygen, and I'm talking about shelter. And that's really, if you're looking for an income producing asset that's going to appreciate and at least stay maintain pace with inflation, real estate, that's the answer for the average person, the best thing out there. So, but should we do it now or should we wait is the big question, right? So the expectations for U.S. home values, this is from Zillow Economic Research. And the black line there, or the darkest line, is Zillow Home Value Index. So that's what home values have done. Looks very much like the Case-Shiller chart that I showed you earlier. And then the blue line is the pre-bubble trend. That's the trend. So then they got together with all the panelists and they kind of thought, where is it going to go from here over the next 5 years? This is a 5-year projection right there where you start seeing those multicolor lines. So the optimists think that it's going to continue to go up significantly, might even accelerate. All panelists combined are right there in the middle, but even the pessimists, the ones that are the bearish on the real estate market, they think it might fall a little bit below the trend, but it's going to continue to appreciate. So those are just predictions. Those are what people are thinking. And I just thought that was very interesting. The people that are the bearish, the pessimists in the group on that red line, even them, they think it's going to continue to appreciate over the next 5 years. So what we're talking about now, so as we make this assessment, is just really a basic economic concept of supply and demand, because the law of supply and demand states that the two variables are inversely proportional. So this means that when the supply is high, the demand is low and otherwise. And that's how it impacts price or value of the houses. And where we are right now, we are over here where we've got historically high demand and we've got historically low supply. And that's why our prices are continuing to rise. So as we look at this directly related to real estate, we just go to the other side of the chart. That light blue line, that represents our demand. And then that blue line represents our supply. So we can see it playing out directly and specifically just the way it's supposed to in this chart here, just on basic economics. And then we just apply that over real estate and we have a perfect match. So what we want to do is really just kind of, as we make a decision as to what we're going to invest in or how we're going to proceed, if we're going to get into the market and start investing and buying now, if we're going to sit and wait. So we just have to really pay attention to the concept of supply and demand. So let's look at its supply. So this article came out, this was June 16th. It says the housing shortage is worse than ever and will take a decade of record construction to fix. And so you can look this up, this article, and read the whole article. But basically what it's saying is at the peak of 2005, 2006, when we were building the most houses that we've ever built before, we were right around 2 million. Average is right around 1.5 million. And that's right about where we are right now, building about 1.5 million houses a year. And if we were to, the supply is so low right now, the housing shortage is so low that if we were to build 1.5 million houses a year, it would take a decade for the market just to become a normal market again. So that's what this is saying, this report is saying. And so if we look at the building cost index, the blue line represents non-residential buildings. The green line is non-building infrastructure. But the red line is residential housing. And we can see with how expensive it's becoming to build a house. And there are no real signs of that slowing down. And a lot of we talk about our foreign affairs, as I mentioned a concern earlier. I have a friend that imports wood flooring from China. And he says that their interaction and their relationship with their vendors, where they buy their wood from or their wood floors from to come sell here in America, they know they've got us by the cojones, and they got us really tight, and they just keep raising the price for no other reason than just they know that they can. And so that's just one personal example of a personal friend. But, it's been in the headlines of lumber going up, of concrete going up, of the steel to mold the foundations of houses is going up. And not only is it just going up, it's becoming less and less available. We're building a new office, and I can't wait to be broadcasting from my new office because it's going to be so much prettier than what I got going on back here. But that keeps getting delayed is because, one, they can't get the supplies. They can't even get wiring in to put in our electricity. They can't. And the other thing that they're having trouble with is labor. They can't find people to come on the job and work. And so just the cost and the time of building houses is going to, it looks like it's going to continue to increase. It's certainly doing that right this very second. And so I question this article, maybe it's more than a decade if things don't change. But 10 years is a long ways to go, and things could change for sure. So these are the U.S. housing starts. So this is where the new home builders, when they're actually filing for their permits and starting houses. And we can see, it's been inching up since the crash of 2008. Builders got wiped out. You can see that steep decline right there. I mean, they just got totally wiped out, and they've been a little gun shy. So they've been building, but they've been very cautious and doing it very slowly. And they go to the very, very far right. You can see we're actually dipping down. We'll see if that trend continues, but we're slowing down in the building because mostly that they can't build them fast enough. I'm sorry, not fast enough, is they can't build them cheap enough in order for them to be able to sell because the costs are going up. So they're doing their math, and they're like, I'm not going to build this house unless I can sell it for a profit. And if the materials are so expensive, that's really slowing everything down. So there's the supply, right? So this is, the supply is, where was that last one? Right here, that dark blue line. We're historically low supply. And so that's an issue, and we're having a tough time keeping up. So let's go ahead and look at the demand. And I showed this last week, and it depends on what source of information that you're getting your information from, right? It's a little redundant there. But what you're paying attention to and what you're where you're getting your information, because mostly you will hear people say that the population is decreasing each year. We're getting slower and slower in our growth. Based on a percentage, that's accurate. But based on an actual number of people, it's inaccurate. As you can see, we're getting more and more people. There's not a real decline there at all in the growth of the population. And the reason that is like, so if you look to say 1960, you've got a 19% growth from the previous year, but that was 19% of 170 million people, right? And then you come up to 2020, and it's only an 8% growth, but that's 8% of 3.5 million people. So there's like that 8% is still a bigger number than what that 19% is. So pay attention to what's going on in the news. So there's facts. There's what's factual, and that's what a lot of them will report. But then there's another story if you actually look what's actual behind the scenes. But specifically with this growth in the population, this represents our demand. It's right where the demand is. There's a little bubble in the population at the age of 29 is the peak age. Most people are at the age of 29 right now in the millennials. And the average first-time homebuyer age is 31. So just statistically speaking, over the next 24 months, we've got a real surge of demand coming in to buy houses. And then if we look at the overall population, like right here's where I was talking about, that's where that peak is. And that little peak is just about 2 years away from moving through that first-time home buyer age. And then you got all of those people right behind them, right? So it's not going to slow down at all. And you can see it's bigger than Gen X. It's bigger than the baby boomers. But then you've got this right here represents the next 2 decades of housing. And Gen Z is an even bigger population than the millennials. So we see our supply at this historic low, but we see built-in demand that's already born. They're already here. They're already walking the earth. And each year they're a little bit older and they're moving towards buying or renting housing. The bottom line is we just don't have enough houses for all of these people. And here's something really significant about all of these people is they've got money and they're getting richer. U.S. households net worth hits all-time high on surging stocks and stimulus help, $7.6 trillion in Q2. Because one of the big pushbacks and one of the big concerns is like, well, that prices can't go up forever, which I agree, but it can go up a lot more and the people have still got the money to buy it. And we'll look at that a little bit more here. Bloomberg says U.S. household net worth soars to surpass pre-pandemic peak. That was from March. So people are wealthier. The average household has more money, but that's not all. If you look at their back end DTI, their debt to income ratio, it's on a steady decline. If we look at credit card debt, per Experian, the credit card debt saw unprecedented drops in 2020. So people are paying off their credit cards. They're carrying less debt. If we look at their debt service payments, their mortgage payments, as a percent of their disposable personal income, it is at an all-time low, something that we've never seen before. So people have got more money and they've got less debt. Further, Americans' credit scores have hit another high point amid the pandemic. So this was just August 17th, a couple of days ago. So it says, thanks to forbearance programs, stimulus payments, a rapidly recovering economy, and even changing consumer spending and saving habits, Americans' credit scores have continued to improve during the COVID-19 pandemic. In fact, the average FICO credit score hit another record high of 716. That's the average FICO score in April, according to the Data Analytics and Credit Scoring Company, which released the latest average score just on Tuesday of this last week. So our population, this growing demand, has got money, they got less debt, and they got the ability to borrow more. It's painting a picture. And here's the other part. They're not stopping at just one home. It's not just one person. They're buying second homes and third homes. Second homes are driving the U.S.'s COVID-19 housing boom. This was from Barron's, the Washington Post. Second home market surges. CNN, people are snatching up vacation homes and many are paying with cash. So the demand is there and they're not just buying one house, they're buying multiple houses. And if that wasn't bad enough as far as representing demand, from CNN Business, Wall Street is buying up family homes. The rent checks are just too juicy to ignore. So this is a clue, right? Wall Street is not slowing down. From Fox News, BlackRock, other investment firms killing the dream of home ownership because they're buying the houses. The demand is soaring. So if we go back and we look at this, and we're already here, this is only going to get wider based on the data we have to look at right now. We just have too many people. They're already here. And we don't have enough houses and we're not building them quick enough. And they're getting more expensive to build. And it's not just one person buying one house. It's one person buying multiple houses. And now we've got Wall Street in on the mix. And so that is only going to widen this gap and cause the price to go higher and the supply to go lower, which continues to drive the price up, right? So I'll go ahead and let's engage. Let's talk a little bit. FOMO investing, based on what you've seen here, foolish or smart for real estate. Let me switch back over here. There we go. There we go. Get to see y'all. So Gianna, I'm 17, turning 18 Saturday. Happy birthday. And creating a relationship with a lender to scale my business 3 to 4 times by doing flips and double closes. Very good. I think a safe prediction for the future is that the housing market is going to really be a great industry from every capacity, whether it's an individual investor like you, Gian, or it's a home flipping business, or it's home builders and it's home developers. I think the demand that you have there, and based on a human need, and they've got the resources to pay, I think build it and they will come for sure. Have you ever lost a great opportunity? And if so, how did you deal with that? Oh, golly. Let me count how many opportunities, how many woulda, coulda, shouldas that I've had for sure. You know what? One of the best pieces of advice that was given to me in that type of scenario, and what it just works for me, and I just still say it. It's a mantra of mine, is don't focus on what's happening. Focus on what you want to have happen. If you focus too much on the past, you're very inclined to repeat it. So focus on what you want to have happen. That's how I deal with it. Also, I think what matters is cap rate. And also there has been a trend with Airbnb causing people to overpay for properties for the short-term rental income. I think you're absolutely right. And that just represents another piece of demand, right? People want to buy houses. And when you've got that much competition out there, and capable and able competition, that can only cause prices to go in one direction. Luis, thanks for the thumbs up. Oh, there's a little thing I can do here. Let me see. I just started doing these here. Like that. That can make you famous. Look at that. So Luis, thanks for the thumbs up. And then Gianna, I'll give you some love there too, right? Turning 17. Everybody wish Gianna a happy birthday. That would be good. And then Christian has a question. Do you think wholesaling is dead? No, not at all. I think, and I have a lot of thoughts on this, by the way. If you can find a deal, there's plenty of people that are willing to pay for it. And that's really kind of just what wholesaling is, right? It's just, you're just buying low and you're selling low and you're doing it really, really fast. And you're making a good little profit without really even having to close on it yourself and bring in your own money. So no, I don't think that is dead. If wholesaling was dead, then investing would be dead because no one would be able to find deals. That's how that would equate. So no. But the thing wholesaling, I would really encourage, and I've been saying this for a while, and I don't know how many people I'm reaching with this message, but I would just stop using the word wholesaling altogether. You're just a real estate investor, and you go out and you find deals and you hold some and you flip some. That word wholesaling, it's gaining steam as far as the stigma that's attached to it inside of the real estate industry. And I'm not speaking so much of the investing industry, but more of the retail industry with real estate agents and the National Association of Realtors. They are convinced you wholesalers out there are stealing their business and you're doing illegal things and you're going to mess it all up, right? That's their story. That's their perspective. And they're doing a lot of push trying to make it more difficult for real estate investors. And I would really encourage everyone to stop holding up their wholesaling paychecks on social media and say, hey, look at me, look how much money I made. I would stop attracting attention to yourself and just go about your business. You're a real estate investor. I go find deals. Some of them I'm going to hold, some of them I'm going to flip. And that's that. I would remove the word wholesaling from your vocabulary altogether. If we could do that as collectively as a giant group, I think the pushback on wholesaling would completely disappear. Alrighty. So is that it? Looks like it. No more questions. It's been a pleasure. Y'all have a good day. If you'd like, you can go ahead and head on over to thelegendschallenge.com. I'd love to work with you if you want to work together for the next 3 weeks together side by side, and we could do that. All right. One more question. Here we go. Thanks, Rob. Do you prefer the BRRRR method or lease options to buy for your rentals? I prefer the ownership. So the BRRRR method, I've always felt funny saying that, but it's funny how that caught on, and that's what everybody uses. So it's common vocabulary now. But BRRRR method, my point being is I would rather own. I'd rather own the property. I just think there's based on what we just went through with the supply and demand thing, I think ownership is going to trump just having control via a lease option. But I mean, if you got the option, I guess you could eventually pull the trigger and purchase. But I think there's a lot of value, and you pick up a few more profit centers as well when you're the actual owner. So that's my preference. Let's see, John, what's this? Hey, do you have a website? And if so, do you use Carrot for lead conversion? I do have a website, but and I don't use Carrot, and I don't really drive much traffic to it. It's just there because, we're in the year 2021 and you're supposed to have a website, but I don't use that much for, I don't use too much for lead generation, but it's there. It's on my business card. So every once in a while, someone stops by and takes a look at it. Right. Hey, you're welcome, Eddie. Fantastic. Glad you're here. And I guess that will be that. We'll call this a day. And so here's 2 weeks in a row. All right. So now y'all are coming in. All right. So I'll stick around as long as you're asking questions. Let's do it. I got nowhere else to be. And let's see, is Vegas a good opportunity to own rentals? I think it's a fantastic opportunity. And here's what I mean. I just purchased my first primary residence this last week. I've been very much against that. I think your primary residence is a bad investment. And I've talked about that a lot, and I don't want to go too deep into that right now. It might be a good buy. It may help you sleep at night. It's, certainly a bridge to some sort of wealth creation in the future. So it's better than nothing. But I'm very big on income properties because you get all the benefits of real estate, but they pay you and your tenants actually buying the house. When it's your primary residence, you buy the house. Here's my point. The question was, is good opportunity on rentals? So my lease just came up. I live in it's about a $3.5 million house for now that I rent, and my rentals pay for me to live here. And the reason I do that is because this way I can live in a much nicer house for a lot less money. That's why I've always chosen to rent. But my caveat to that would be is if you could buy and it would be cheaper on a monthly basis than it would to rent, then you might want to consider buying. So my lease just came up, and nationally rents have risen 8% over the last year. Here in Vegas, they've risen 23%. And my landlord dropped a lease renewal on me of an 80% increase, 80. So I was like, okay, you really don't want me to stay here, or you just, you're drinking the Kool-Aid from somewhere else or something like that. But anyway, so we just decided, okay, so we're going to move. I'm not going to pay 80% more. And so we went out and we were looking, and rents have gone up significantly. And we started doing the math that you can actually cash flow on $300,000, $400,000, maybe even $500,000 houses in Vegas right now. That's how much the rents have gone up. And one of the reasons I moved here, because I wanted to be able to invest in my own backyard. It was tough for me to do that in Los Angeles and buy cash flowing properties. So we came here, and then when I got here, I started doing more research on the market, and it was predicted to double in population over the next 5 years. And so it's a great opportunity right now for you, JF, to look at properties with a strong rental income and a strong appreciation potential as well. So there's my spiel on Vegas. What does BRRRR mean? Haley says. Thank you, John. I enjoyed having you here, so thanks for being here. Haley, what does BRRRR mean? It means buy, rehab, rent, refinance, and repeat. I think I got that in the right sequence. Right? So you're just buying a house, you're fixing it up, you're going to put a tenant in place, you're going to go refinance it, and then you're going to go do it all over again and just kind of keep doing that over and over and over again, which is a very nice systematic process to building great wealth over time. Okay? And a lot quicker than the stock market will do it. Let's see. Okay, here we go. Khalil, I've seen your strategy for buying properties on the market that are free and clear. What is your disposition in those properties? Okay, so my disposition is I lease all of my properties out. I never plan to sell a house that I buy. I do sometimes sell them, but I'm 100% focused on buy and hold. I mean, you can get rich flipping properties, but you get wealthy holding them. So that's what I do there. Is I hold on to everything and I turn them into rentals. And now someone had said earlier, talking about the short-term rental game, that's significantly a big significant consideration for me right now. And so we're picking up a property that I think is going to be perfect for that. And so we're going to give that a shot and try that out. And we might be doing more and more of that. So my disposition might shift, Khalil, from just a traditional landlord status to doing short-term rentals. But I'm going to give it a shot and see what all the hubbub's about and see if it plays out in real life the way everyone's bragging about it. All righty. Sweet. Well, happy Sunday to y'all. Hope you had a great weekend. Enjoy the rest of the day. And I will got a new video coming out on Tuesday. We are revamping the entire podcast. So if you haven't been to listen to the podcast for a while, we've been a little bit intermittent. We've been deciding what we're going to do with that. And so that's over at epicrealestateinvesting.com. Type that into your browser. That'll take you right to the iTunes app and our channel there, or our podcast there. Alrighty. And then lastly, if you'd like to go deeper and work right alongside with me at a really affordable price and a really tight and a really small window to get a whole lot of stuff done, like getting a deal signed in 10 days or less, go over and check out the legendschallenge.com and see if you like what you see over there. Join us. We're getting started here just in 7, 8, 9 days. And if you don't, maybe the next time around. Okay. Y'all have a good day, and I will see you guys next time. Take care.